Hello, and hold on, let me change my name because it bothers me that this Zoom account says Antonio, not Tony.
I don't know. With the hair like it is, it's a bit Antonio Banderas. I think it's got to be.
Thank you.
Come on, it's full
I,
desperado.
a young Antonio Banderas, absolutely. Okay, so let's try this again. Okay, so hello and welcome to Raving and Ranting with Ed Halsey and Tony Kindness, also known as Profiles in Risk, episode 350 or so. So today I have Ed Halsey across the pond, melting in the middle of a heat wave on August the 2nd. So if he looks a little sweaty, it's because the UK is not built for extreme temperatures of this sort. And I had him turn off the fan because it was causing noise. So Ed, and Ed has been on the podcast before. I'll do my best to include the link for the old episode. Ed, great seeing you today. So other than melting, how are you doing?
Great seeing you too. Yeah, I'm all right. It's just very, very hot here. It's actually, the temperature's not too bad. It's the humidity. We stupidly build all our houses to keep the heat in, not to get it out. So, yeah, I'm definitely going to be investing in some UK air conditioning cellars in the future because I think we're headed that way.
Okay, awesome. So you have been in insurance for a good while, and then you've went off on your own and have founded like two startups now in the space.
Yeah, just yeah, as many as I can get my hands on. No, it's yeah. I mean, uh, I've done lots of different roles. So I started off as an underwriter, and worked my way up through kind of AXA, Aviva, or Norwich Union as it was back then, all in commercial classes of business. And then kind of moved into a little bit of consultancy, and then moved into a little bit of selling kind of technology solutions in. And I think it was during that phase where I was selling technology into insurance that I kind of realized, oh, there's a lot of inefficiencies here that we need to kind of fix. And I think I can fix them. And I'd really like to go and set something up. And I didn't quite go out on my own. Co-founded Hubb with Mark and John Costello about 2 years ago now. Actually longer than that, 3 years ago, June 2019, I think we originally came up with the plan. And yeah, we've now just gone through our first year of trading as a fully regulated FCA broker. And it's been a very exciting year for us.
So the broker is that
Hubb.
Hubb. Okay. HUBB.
Hubb, yes.
Okay.
HUBB, which initially Hubb started off as, it was an acronym for honest usage-based broking. And the idea of honest usage-based broking is honesty, first and foremost. But the usage-based broking part of it initially started off that we kind of had this idea that with commissions getting out of control in a lot of areas, and no longer necessarily being reflective of the service that customers are getting, but instead being reflective of the customer acquisition costs that we're facing in the industry, particularly with pay-per-click costs being $55 and up, acquisitions being up to 21 times EBITDA. We're seeing the high acquisition costs, and that's now what the customers were paying for. So we kind of went, well, hang on a minute, why are they paying it? Why is the customer acquisition cost so high? Why is it costing to service it? And then stripping that back and relating what they pay more closely with the service that they're going to require throughout the year, aligning the two. However, the usage-based broking part of the issue we found as we were going on was a lot of people thought they knew what we meant by it. They went, oh, they just sell usage-based products. No, that isn't what we do. And I can see why they would jump to that.
Yeah.
The idea was that it was the usage, the broking element of the relationship with the customer that was going to be usage-based. So the amount of service they had from the broker was usage-based during the year. But it didn't really translate. So we're kind of moving away from that slowly, still keeping the name, but just moving away from that phrasing and finding other ways to better articulate what it is and how we do it.
Okay. So is it a fee-based brokerage as opposed to a commission-based
Uh,
one?
So in the majority of cases, yes,
Okay,
it will
awesome.
be fee-based, but in some cases, it will be commission if that's what's in the customer's best interest. So for example, sometimes it might be in the customer's best interest to for us to do everything through the insurer because they want to put the whole amount on premium finance with the insurer. So it's all about what's in the best interest of the customer. But the more important point of it is not whether it's fee-based or whether it's commission-based. It's that we take the same amount of earnings from every insurer, which enables us to be impartial. So we're not there going, oh, well, this one over here we get 35 points on, and this one over here we get 15. Guess which one we're going to recommend? It takes away that temptation. So it's flat across there. It should be an amount that is commensurate with the work that that customer's going to do. And it should always, and this is the strongest thing we have, and the thing that's resonated with customers more is it should always be proactively disclosed to the customer. We shouldn't wait, as the FCA says, for us to be asked, what are we paying? We did a survey and 76% of people had no idea what they were paying for commission to their broker for the service. So how do they know whether it's good value or not? They don't, because they don't know what it costs.
Yep.
And that just feels inherently wrong to me. If something's a good deal, something's great. If you had a special offer on at the moment and it was incredible value, you'd shout about it, right? So why are we not shouting about commission levels? Go figure. I mean, ultimately, commission as a for me, commission as a mechanism is mental. It's broken. It makes no sense to anyone logical, but it's been normalized within the insurance industry. If you think about it and kind of deconstruct it, you're basically going to a broker, and because of the nature of commission, it being a percentage of the premium, and you're beating them with the carrot and feeding them the stick. You're essentially saying to them, if you get me a better deal on my insurance, I'm going to pay you less.
Okay.
If you get
I
me a
have to
worse
ask.
deal, I'll pay
I
you
have
more.
to ask. Is that a British saying, or is that an Ed-ism?
Yes, it must
It's
be.
a British saying. I've never heard
I
that
thought
one.
it
That's
was a British
fantastic.
saying. It might be an Edism.
Okay.
No, it's about it's this idea of reward and punishment. So you beat them with the stick and you feed them the carrot. And the feeding them the carrot is you give them something nice to get them to do what you want, or beating them with the stick is you give them a punishment for. I mean, it sounds really brutal now. The fact that phrase is normalized is a little bit scary, but the idea is being it for me, it feels back to front, because you're rewarding them for getting you a worse deal and punishing them for getting you a better deal. It's back to front.
Yes, absolutely. I've always liked the idea of a fee-based brokerage where if they save you money, like, they don't lose money on saving you money, because why would they save you money, right?
Yeah.
So, yeah.
It should be the other way around, right? That if you get me a better
around.
deal and save me money, I pay you more, not pay you less.
Exactly. It should be a win-win for both of us.
Absolutely.
So now
it drives the right behaviors.
The description on LinkedIn says award-winning AI automation and data science backed broken platform. So I am curious, how does the AI automation and data science play other than good marketing?
It's a lot more than good marketing, thankfully. What we've done is we've massively, in a lot of cases, in the majority of cases, reduced the cost of buying insurance. The only way we can do that is to strip out a lot of the administrative work. So 63%, up to 63% of a broker's day can be spent on admin. So if you can take that out of the equation.
Now, in the UK, if I'm not mistaken, and I've never sold insurance, much less in the UK, but in the UK, if I'm not mistaken, that 63% is mostly the bar tab, the pub tab from the broker meeting with the underwriter in the pub to write your insurance in the back of a napkin, right?
I think in certain classes of business, in certain parts of the market, maybe, but a lot of it's e-traded and it's online and the like, and that's not really. It's not 63% of cost. It's 63% of their day is spent on petty admin. So 63% is spent on low value tasks that aren't really benefiting anyone. double keying and the like. That was in the future of commercial insurance broking, which was a study done by the CII with PFK Littlejohn. So they're spending 63%. So if you can bring that down, you can bring the cost down. Now, this is where we because we're going on to a fee basis, our fees are a lot lower than commissions are in the majority of cases, which is why we're finding it really easy to win new business. Ultimately, we're saying, do you want that same AXA policy, but do you want to pay 20% less for it? Yeah, thanks. It's not a hard sale in that sense. It's the same policy. We're just selling it for less because we've made the administrative burden of placing it with AXA, Aviva, Allianz, whoever it may be, all the A's there. But whoever we've placed it with, we've made the process of that much less onerous on us. And you raise a fair point, right? That how much of the insurance premium that you pay and the commission that you pay is actually going on the insurance and the servicing of the insurance, and how much of it is going on, well, we need the account exec to have a BMW 3 Series and spend most of the day traveling around the M25 to get to see someone. How much of it is that golf day that they need to attend every day? I played a lot of golf when I worked on the insurer side of things. I got my handicap down to a very good level at one point. And it's all about that entertainment and all that stuff that the customer doesn't care about. They just want the product that they need at the lowest possible price. That's all they want. That's all they care about, is those two things: the right cover and the lowest possible price to pay for the right cover. So yeah, I think you've really got to question how much of that money actually goes into the insurance and the servicing of it, and how much goes on other things, and kind of takes us back to the customer acquisition cost at the start of the conversation, which is a huge part of the equation, a huge problem.
Okay, and at the same time as you co-founded Hubb, you also co-founded a marketing agency specifically to help your competitors market against you, if I'm not mistaken. Which is Evermore.
No, not quite. Not quite. So didn't co-found that one. That one is all mine. All mine. I was greedy on that one. And Evermore is it's more of a initially when I started out, I was really vague on what Evermore was on purpose. I was kind of like, look, let's not pigeonhole ourselves too much.
A brand to let you play whatever extra things you want to play. Okay.
It was really a side hustle while we set Hubb up, and it was I want to do a bit of consultancy with this company over here and a few videos over here, and I had this idea for the Evermore studio and how I was going to do all those and create this kind of virtual digital studio that I didn't have guests on.
The best production quality of anything within the insurance space, like State Farm commercials in the States, have less quality than the original Evermore stuff.
I make the production quality as good as possible to make up for my complete lack of charm on it. It's essentially the number of people who've watched it is quite scary, actually. They watch it and they all say to me, they go, do you know who you remind me of on it? Has anyone ever mentioned you're just like David Brent? And I'm like, Ricky Gervais in The Office, his character in the proper Office, not Steve Carell. Okay. Don't come at me with Steve Carell was the Ricky Gervais version. And they say to me, they're like, oh, you sound just like Ricky Gervais when he's playing David Brent. And I'm like, that's not accidental. I'm not Brenting my way through every day of my working life. Like, it's a character. It's a bit of a caricature, although people watching this now will probably go, man, I'm not so sure it is. He is a bit Brent.
But the Trump inspired series that I think came out this year, that one was just hilarious.
Yeah, I'd love to claim that was my idea. It wasn't. I have to be honest, I hated the idea when we first came up with it. It wasn't. We were kind of brainstorming ideas of things we wanted to do, and I was kind of like, I don't, is the Trump thing over, and is it a bit played out? And the conclusion I came to was, look, if we're going to do this, A, we've got to do it properly, and B, we've got to work really hard on the scripts. The scripts, it will live and die on the scripts. It can't just be at this point a lazy Trump parody and kind of just poking fun at him. so it was all about the execution for me. The idea, I was like, but if we can get the execution right, and I think we made a good play at the execution. I think, you know, we as with most things I do, completely over-engineered it. Ronald Rump, as his name was in the series, he had his own Twitter page. He'd been tweeting on his Twitter page for like 3 months prior to the release. There's a rumpinsurance.com website, which is a complete, like, we literally took the donaldjtrump.com website and recreated it as Rump Insurance with the actor on it. And
I hadn't
yeah,
seen
you
the
can
website.
actually,
It's fantastic.
yeah, you can visit the website, and it sort of says at the bottom that, you know, this, whereas at the bottom of the Trump one, it says, yeah, our campaign has been funded by people who have, there we go.
Yeah,
Our campaign has been,
for those listening to this on the podcast side, click on the video link and come look at or go to rumpinsurance.com, because I'm showing the website. Anyway, go ahead.
yeah, so we so at the bottom, I think, if you scroll in, yeah, paid, it says normally the campaign is paid for by donations, and ours says, you know, paid for by customer commissions, broking fees, work transfer fees, insurance profit shares, pay by play fees, marketing budgets in inverted commas, premium finance overriders, document issue fees, not authorized whatsoever by anyone, or likely even a real business. The scary thing is, this website probably gets more hits even now than a lot of actual legitimate broking websites. The hits on it are absolutely insane, and the number of inquiries we've actually had on the
People
website have been
looking for insurance.
Yeah, no, who actually think it's real and contact us. You know, it's a bit placeholder in parts on the website. I wasn't going to design a whole website. I'm not mental. But yeah, so he's got his own LinkedIn. Yeah, so so he had this. He's got a LinkedIn page, and what we did was every time we released an episode, we'd pre-scheduled all of the tweets that Romp would make along with it. So when it like went out at, I don't know, 10:03 a.m. at 10:05, he'd be saying that didn't happen. I deny that, and then people who liked the comments on LinkedIn or liked the video, he'd start arguing with them on LinkedIn as an actual character. It was all wildly over-engineered, but I had a lot of fun with it, if I'm honest, Tony. It was all a bit ridiculous.
Did this in some way bring business? Like, did it bring revenue to Hub? Or okay. So it was.
I mean, absolutely. Yeah, I mean, it had, just to put it into perspective, I don't know what the last count was, but it had kind of 500,000 views across all channels, which is no mean feat for a bit of like pretty niche content. I think every episode was getting, just on YouTube alone, was getting something like 25, anywhere from 15 to 20,000 kind of views an episode. LinkedIn, then it was getting, we were embedding it in LinkedIn and embedding it on Twitter. So yeah, it did quite well on TikTok as well. I think it's episodes 1 to 8 are kind of, if you search the Insurtech hashtag on TikTok, they're like, of the top 25 videos on Insurtech, I think they make up 8 of them. They're all in the top 25. So no, it was great, and we had a lot of inquiries, and it created a lot of noise. And for us, it was a branding thing of going, we're here. We don't mind if we upset you. We are going to say things you are not going to like, and this is how brash about it we're going to be. And that resonated as much in the industry as it did out of the industry. So it started a lot of great conversations for us with insurers, for example, who went, this is brilliant, we love it, you know, how can we be a part of it? That otherwise we might not have got agencies with, or might not have gotten into those conversations. So yeah, for what was actually a pretty fair budget, it returned tenfold.
So a quick parenthesis. I just noticed the lightsaber behind you, which very likely makes this the only episode of any insurance show ever where both of the nerds have nice lightsabers in the somehow
I'm such a loser.
I kind of feel like yours should be red,
Charming, charming. I'm a Sith Lord. Brilliant. It should obviously be pink. It should be hub pink and purple with a like gradient glow through it. That's if I could get that lightsaber made, I would.
Okay. So part of what led us to record again was your ranting and raving about how the industry can better recruit and how we can better attract talent. So let's have that conversation. What is it that we should be doing that we're not doing to attract talent?
And I think there's so many things we need to be doing better as an industry in terms of attracting talent. I mean, I went to Beaver this year, and anyone who's Beaver's like the big agent event that we have. The brokers all come, and I think there's about 8,000 people come to it. All the brokers across the UK, and I don't want to preach about diversity, right? We've got a problem in the industry with it. Everyone knows that, but it's not just the diversity issue that's there. It's just everyone talks the same, and everyone sounds the same, and everyone uses the same language and the same. I mean, you're considered an outlier if you wear like brown shoes with your suit. It's just so. And we wonder why. We've got like there's a phrase here that I don't know if I suspect it doesn't follow over to the States, but there's a phrase in the city that they say no brown in town, and what they mean is you shouldn't wear a brown suit, shouldn't wear brown shoes, etc. And I'm like, and we wonder why we can't innovate as an industry. That the biggest crime you can commit is you might have a different color pair of shoes on. I mean, like really, people, are we honestly in that situation? And you look at it.
Is that an insurance thing? Or is that a British thing? Like no brown in town. Is that like regardless of what?
That's a good question. I've only ever worked in insurance, so I only know it as being I only know it as being part of insurance. Okay. I've heard it said 100 times over in the square mile in London. So that's a good question that I don't actually know the answer to. I suspect it's certainly I think it's like a BFSI thing. Banking, financial services, insurance thing, and probably more of and certainly it's a London thing rather than a regional thing. But yeah, so you've got stupid stuff like that goes on that you just think, God, we wonder why we're not really innovating. And the other one that always kind of makes me, I get quite heated about. I'll try not to rant and rave too much on your podcast, Tony. I don't want people to switch off. But
this is the Ed's rant edition.
Right, brilliant. Shut the door, lock everyone in.
Like, we'll have a content warning.
Right, we're going in. No, so I mean, one such example of it, right, was we became the first. We put out a big press release and did a big loads of PR and the like about the fact we became this kind of the world's first metaverse ready insurance broker. And the problem is,
okay, so I know what the metaverse is. What is a metaverse ready insurance company?
So, good question, Tony. I'm glad you asked. You're like a pro at this. No, so it's being the world's first metaverse ready insurance broker was. I do not, and this is the problem. Everyone saw the word metaverse broker, and everyone reads the headline and goes, "Oh, look at these idiots! They think they're going to sell insurance in the metaverse. Oh, this is a big waste of money. It's a fad." That's not what we're saying. And if you read the actual body of the articles that we were putting out, that was never what we were saying. We weren't saying we're going to go and sell millions of pounds worth of insurance in the metaverse. What we were doing was going, we are, if anyone wants to meet us in the metaverse, we're ready to greet you in the metaverse. However, that's not what we're using it for. We're using it to onboard new staff, training, board meetings, planning sessions, collaboration things, workshops. We do kind of like team days, team building exercises. So we'll go to Topgolf and have a knock around at Topgolf in the metaverse together. And what that does is it enables your team to feel like they're in a room together without all the cost and the time of having to get them from all over the UK to one place. It's like a halfway house of, okay, I mean, because I'm down in Kent, and Mark and John, my co-founders, they're in Glasgow. So it's the next best thing of us constantly being up and down or going to see each other to be face to face, but still having that feeling, still being able to see body language, still being able to feel like you're in a room and to a point interact with people. And the reason I kind of get quite impassioned by it is because of that first bit, that people read the headline and they dismissed it. They went, stupid, it's a fad. Everyone does that in insurance, and it really annoys me. Stop saying it's a fad. Stop commenting on things you don't yet know about. How many of you that, and I looked down the lens, how many of you read that article and went, stupid, it's a fad? How many of those people, and be honest with yourself, have been into the metaverse? How many of you have used it? How many of you have tried it for yourself? And the answer is 0 in almost all cases. But they're commenting on it and dismissing it instantly because of them understanding 1% of what it is and how it can be used. And that's a really dangerous mentality to have in any industry, but particularly in insurance, because we need to understand new things. We need to understand new exposures. We need to see where opportunity arises, where risk is emerging. So if we're just going, that's silly, I'm not going to look at it. That seems a little bit more of a reflection on them not being willing to learn something new, and not being willing to expand their horizons, than us being stupid for going, well, there's a lot of hype about this. Let's see how we can use it. Let's see what benefits we can get from it. And moreover, what's a VR headset? 200 quid, 200 pounds, $250.
Yeah, the Quest 2 is it's affordable.
Yeah. Fail fast. Just try it. See if it works for you. Get it out as a team. And that's what we did. We bought a limited number of headsets to start with and have gradually rolled them out amongst the team and kind of gone top down in terms of, okay, you're on the senior management team, you get a VR headset. Started off as just John, Mark and I seeing how we got on with it and just gradually scaling it across the business. And as soon as it stops working, as soon as that isn't the better solution than other options, then we stop doing it. It's fine. But that's kind of, and that's the bit that, taking you back to the conversation you said about, you asked about how we get talent, for example, to attract. Is that the kind of mindset that new talent want to join? Closed mindsets? Do they want to come to an industry that goes, we don't know about that new stuff? That's, do they want to be working on? And if you've got one, I sympathise for you. Probably not going to get a sponsorship from them after this. If you've got an IBM ThinkPad in one of those brick-like laptops, do they want to be working on one of those, or do they want to go and work for? I remember when Flock were out there, and like part of their advertising for new jobs was, not when they were, they still are, but part of their advertising was, come and work for us, you'll get a MacBook Pro. Brilliant. Insurers aren't doing that because they go, Mac, we couldn't possibly.
I'll tell you what, like in my world, my ability to work from a Mac, even if it's my own Mac, which I do work from and I have at my last 2 jobs, it would be very expensive to pay me enough to be willing to give that up, right? But why? Because I spend 10 hours a day on it, and it's so much better. And of course, the leadership in our industry thinks that that's absolutely ridiculous. Or like, what do you care what computer you work in, right? Well, yeah, it's crazy. Well, I have choices.
But they're the same. They're the same leadership who will spend £5,000 a day with a top consulting firm to go, why are my staff not productive enough? I work on a 49-inch ultra wide monitor. It's I can't remember the exact stats, but loosely takes about a month. In terms of productivity gain, it takes about a month for you to earn back the cost of it in increased productivity. I have like 3 windows open any time. If you see me now, when you were sharing the Rumpf website earlier, you went over there on my screen. I've got so much real estate to have things open. I'm not constantly flicking between windows and trying to find stuff. It's much easier to work with.
I'm on a 49-inch ultra wide also, and it's amazing.
There we go.
Absolutely amazing.
Probably the best investment I made, actually, in terms of pure productivity and kind of value for money. Yeah, a massively important investment I made. But I think all of this goes back to other industries are doing it. Other industries are willing to show. I mean, pre-COVID, it was completely unfathomable for anyone in the insurance industry that not being physically in the office was an option. Which is, no, we don't do that, can't do that. I heard the word a lot. It's impossible. It's not feasible. And then COVID hits, and all of a sudden it becomes very feasible very quickly.
I made a video prior to COVID where and it's still on YouTube, where I said, what we do in insurance, 95 to 99% of it can be done remotely. If you're not being remote friendly, you either have bad management or bad technology. And then COVID happened, right? And now we all have the technology. So the only option left is bad management. And from the recruiting perspective, I at least here in the States, I can tell you, holy crap. It is so hard to recruit for roles that are not remote. And on the other hand, like I am, I think my business model, I don't know if I should say this out loud. Hopefully anybody made it 35 minutes into the recording. They're
sorry
fans.
if you did.
They won't be offended. But I'm starting to realize in my new business, recruiting, I'm starting to realize my business model is I partner with Insurtechs to find them experience in insurance talent remotely, and I steal that talent from traditional carriers and brokers that are not being remote friendly, and it is very very easy. I've stolen, I don't know, like 15 account managers from different agencies in the last few weeks for the single reason that they've been forced to go back to the office, and they don't want to be in the office, and there's no need for them to be in the office. And my client is incredibly remote friendly, and it makes it's like printing money. I call them and I know that I have a fantastic job for them, because the pay is good. They're probably not getting a raise. There might be, but the biggest thing they're getting is 100% remote.
Yeah, which is, and that goes back to certainly in my hub, with my hub hat on, which is really my only hat at the moment. Evermore is very much not really anything anymore. It's Nevermore. Is probably the reality of it. We do some bits and pieces here and there, but with my hub hat on, it takes you back to that customer acquisition cost piece that we were talking about. And actually, for me, they're going, oh well, they're just undercutting us. Wow, they're not making any money. I'm like, yeah, but I'm not sending someone around the M25 in that BMW 3 Series who's going to want a BMW 4 Series next year. Because they're going to want to see progression. And I'm not sending them around there every renewal going around the M25 with rising petrol costs and putting them in £1 million office, £1 million a month office in London, and having to pay them London waiting so that they can get a train into London. And that's so my cost base is so much lower because I can go to them, you can work at home, we'll give you a device, we'll secure the device, we'll get you to work on the cloud in our platforms that are all secured and encrypted, and you can work the hours you want with flexibility as long as there's coverage. We don't expect you to be. You don't have to be up at 5 in the morning to be on a 6 o'clock train to get into London in time. You'll be with your family. You can kiss your kids good night every night. You can eat dinner with your wife. You can eat dinner with your husband. It's so much healthier. I was so much happier when I started working from home. I'm not sure my wife is because she has to see me more, but other than that, it's much better.
And I think that's reflective of how just about everybody, except for very high level executives who had a very nice, who have stay-at-home wives and a very very nice and have a very very nice office, right? They're not in an open cubicle setup. I think just about
and if they're a senior executive, they probably live in London. They can probably afford a house in London, they just hop on the tube.
It's so interesting to see how that difference, right? And the executives don't understand why the younger crowd uh is being lazy, right? They perceive the younger crowd as lazy, uh,
Yeah,
because they don't understand how different it is. How the younger crowd is commuting an hour and a half to be in an
yeah.
uncomfortable open office environment, and they're like, what do you mean? The office is fantastic, right? Because they have a fantastic setup.
I think as well, they kind of see it as being, oh, they're lazy, and they measure it on their own scale. I don't know about you, but when I was in my early 20s, anyone who worked with me, sorry, I was lazy. When you're early 20s, your priorities are elsewhere. Of course, you're lazy. You're not. You're in a different place, and also you're remunerated to be lazy. You're on. I started off my first job with £12,500 a year. So don't, Mr. Exec, on £300,000 a year, tell me I'm lazy and because I don't want to commute and I'm not committed. You were lazy back then. It probably wasn't until your mid-20s and your 30s when you started getting paid enough to justify doing it that you were getting along. So
Well, and
it's all a. Mm,
if the UK is anything like like corporate US, uh, that executive is not only well paid but also has a large variable performance based pay. So they have every incentive, right? The kid getting paid, you know, 35,000 a year here in a low cost living area of the States, not
mm,
only is not getting paid enough to care too much, but also whether they bust their ass or whether they don't makes no difference in their because
no.
they don't have a variable piece, or if they do, it's tiny and related to overall company performance, which they have zero effect on, right?
So, funny enough, I had two similar conversations. That the first one was when I left an employer, and I left a big company to go to a startup. And I remember the boss calling me in, and she said after I'd resigned, she went, I don't, I think you're making the wrong decision. I think you're, I don't understand why you're doing well here. I don't understand why you would leave here to go and work for a tin pot company. And I said to her, well, that's the phrasing she used, charming. And I said, you've got to understand here, I am just, when I go there, I can be the hands and arms of the operation, or the mouth, more likely for me. Um, Whereas here, I'm just a blood cell. And even blood cells have to follow veins. Whether I have a brilliant year or not has no impact. And I want more responsibility than that. I want to be held accountable. I want to influence the success and failure of the business that I work for and be able to see that. But more importantly, I want to be remunerated for it. And I remember one of my, this is dreadful, and it was really petulant at the time, but I'd scored a big deal right on my way out the door, just before I'd resigned and before I was planning on going, but it was only a couple of months before. Big deal. And my boss rang me up and she went, oh, you must be buzzing. You must be over the moon. I went, nah. And she went, well, you've just closed a £2 million deal. And I was like, yeah, yeah, but I'm still going to get paid the same at the end of the year. And now I've just got loads of extra work to do to transfer all of this business in. And I'm going to have to project manage it. And if it goes wrong, it's going to be my fault. And that's a really petulant and poor view to have on it. And you grow with age and know that. But actually, the point of what I was saying was true, which was, I remember sitting there at the end of the year and I got a top five. I was in the top 5% in the company and I got a top bonus, right? And because of what I earned, because I was in a higher tax bracket than some of the other people, there was other people who got low performance bonuses who took home more money than me in the top 5% because I'm taxed more on it. And I'm just like, why did I even bother? Like, the difference between a top tier bonus and a mid tier, or even getting a bonus, was like 1,200 quid. So what, $1,600 for a year's work? And I was like, 1,600 quid worth it for, 1,200 quid worth it for busting your backside all year round? And then it takes me on to conversations we have at Hub, or conversations I had about someone I used to work for who couldn't understand why everyone didn't care as much as them. And I was chatting with someone else about this the other day who will remain nameless, who isn't at Hub. And they were saying they learned this lesson that, you know, you can't expect everyone to care as much as you do as the owner of the business if they don't have the same skin in the game. If you own 80% of the business, or you own 60% or 50% of it, and they own 0.5% or nothing, of course they don't care as much about the success and failure. They care about them. They care about what's in my pocket at the end of every month. That's just natural human nature. That's not greed. It's just logic. And I think that's a really important point as well in attracting recruitment. Be realistic about what people are going to come in and do, how committed they're going to be. But I just think the main problem we've got is it's not a very appealing industry. I love insurance. And you find that anyone who comes into insurance doesn't leave. We all stay. And there's a reason for that, right? It's secure and there's good prospects and you can work in different areas. It's a great industry. But from the outside looking in, do you look at insurance and think, that's a bit exciting? No, you just see loads of grey dudes in suits rambling on at conferences in the most unentertaining way possible, just talking about the intricacies of Rwandan reinsurance and like, just who cares? No one cares.
So it is interesting. It is a wonderful industry, but it doesn't look like it. You're absolutely right. And here in the States, the conclusion that I've come to is it is a wonderful industry, but the entry level jobs are really crappy, and they've gotten worse over time, right?
Yeah.
And not only are they crappy, you can put up with a crappy job if you have a long-term plan, if you have visibility as to the better jobs later on, and you have a plan on how to get there. The reality, at least here in the States, is we hire the kids, throw them in a call center, or throw them in entry-level claims, or at a State Farm local agency, and we let them rot, and then they leave. And then at the same time, I go to the conferences, I go to APCIA or to CPCU or whatever, and the leadership is going, why can't we retain our young professionals? Well, you threw them in a call center and, metaphorically chained them to their desk, treated them like a 50-year-old, punished them for going to the bathroom, and didn't tell them that there are great careers in insurance, and they had no idea how to get to those great careers. Like, insurance nerds exists for the very purpose of doing that, because the carriers just don't do it. And we haven't even talked about claims, like in the claim space. Now that is just so many just horrific jobs in entry-level claims here in the States. I don't know if it's better over in the UK, but here it's a burnout factory.
Yeah, I think it can be. I mean, there's no greater burnout factory than sales. That's horrific.
But in sales, the few survivors make a ton of money. There's not a lot of them, but the few that do make a ton of money.
Yes. Whereas in claims, yeah, you're right. I mean, it's difficult for me to say. Claims was never something I worked in, but my wife did work in claims. She loved it. She worked for, and I'll name drop them. She worked for Conveyor, well, she worked for Sterling, who were latterly bought by Conveyor, who were a brilliant employer for her. She came home with a smile on her face every day. They treated her with respect. They gave her opportunities. They paid her well. They were fair with her. Credit to them. They were a great employer. She was very happy when she was there. And she loved her job. She loved that, and I guess some of it's mindset. She loved the fact that when people were at their lowest low, and she said sometimes it was harrowing, sometimes it was difficult, but when they were at their lowest low, she could be the one that was there to pick them up. And that's a beautiful mentality to have. That's what claims should be about. That's what all of us in insurance should be there to do.
When claims is done well, it absolutely has that. Here in the States, we've call centerized it. We've taken out all the good stuff in many cases, right? Some companies, like Cincinnati Insurance is wonderful. Cincinnati Insurance is a super regional medium-sized carrier that has 1,000 field adjusters to this day, and those field adjusters have wonderful jobs, and they treat the client wonderfully. But on average, the large carriers have moved to a call center model where you lose the human side of dealing with people face to face, and by moving them to the phone, now people are more likely to be mean to you, or right, to be less patient with you, and less likely to be understanding. And so my best friend Andrew Holland grew up at Nationwide in claims, and then he moved over to Cincinnati Insurance, where he's done very well. Back at Nationwide, Nationwide had figured out that the worst states for fraud were Texas and Florida. So they chose a few of their best people and had them handle bodily injury claims only Texas and Florida. So right, with the idea that those people are really good at what they do, and those are the most difficult claims. Well, yeah, but what you're doing is you're burning them out, because every claim they touch is an extremely difficult claim, likely to have fraud. The way we do claims,
it's deeply unpleasant. I mean, that was the most harrowing thing, was that was how I found out that I'm not your best friend. In that conversation, that's broken my heart. But one of the things that came up earlier that I was interested to ask you is, in the States, have insurers got as big an obsession with graduates as they have in the UK? Because that's always been a bit of a chip on my shoulder.
With university degrees.
Yeah.
They used to. I think it's gotten better. So let's say 5-6 years ago, yes, it was very hard to get a job. Going back to 2010, when I started in insurance, just after the recession, you couldn't get a call center job without a college degree. It's gotten better. They're a lot more open-minded now, especially if you have experience. If you come from like an agency, or if you come from like a construction background, which would be useful for property claims, or if you come from a mechanic background, which would be useful for auto claims, for motor claims, then they become more open-minded. So in the UK, are they still thoroughly obsessed with degrees?
Yeah, some insurers more than others. It has to be said. I just found it mega frustrating. I didn't get my degree. Fun story. I dropped out at the end of my second year because I got offered a record deal in the States. True story.
You got a record deal?
I went and lived in the States. Yeah, I got a record deal.
So I didn't. That's not on your LinkedIn.
I don't put that on my LinkedIn because it's not as interesting as insurance, obviously.
Are we talking country music? Are we talking rap?
Yes, I was. That was very Brent. I was merging country and rap in one. I was like the early Lil Nas X.
I really feel like you're pulling my leg right now.
Yeah, no, I am. That's British sarcasm coming through. Okay. No, I was kind of. It was at a time. It was at a time when Craig David was kind of big, so it was that kind of early R&B garage pop type music. Yeah, less said about it the better. But you can find remnants of it online. So I didn't have a degree. So I was quite lucky to the first role I got.
Quick parenthesis. So now I'm assuming that all of the content creation you do is for no other reason than to bury the old record, the old music career deeper and deeper down
SEO burial.
It's SEO
just
defense.
Get exactly that.
I get it now. Anyway, continue.
Yeah. So I didn't have a degree, so I found it quite difficult, and I know there was a lot of other people I worked with that we looked around, and there was people who'd gotten degrees who weren't the hardest workers in the room. They weren't the smartest people in the room. But because they'd managed to get on a grad scheme, because they got like a 2-1 in a completely unrelated degree and managed to convince to get on the grad scheme, they were just getting constant promotions and constant pay rises. Whilst the people who are busting.
But by grad scheme, you mean they came in on a training program? Basically.
Essentially, yes.
Okay. So they would constantly get promoted compared to the other guys.
Because it was in their contracts that. Yeah,
it was in their
contract. You're like killing yourself, and you're like, yeah, it would be like part of their training plan that if you achieve X, you will get Y. If you do your ACII qualification, you'll get a pay rise to this, and so they had these whole careers mapped out for them.
Also, so we're not talking for the first 2 years. We're talking for like a long time.
Maybe it was for but once you're on that path, you've had the promotions versus. Yeah, there was some really talented people I was working with. They were just killing themselves every day, and you just saw them flat, and you were like, "What?" And they're watching people around them, and it caused you a disillusion. One of my I'll never forget. One of my bosses said to me, "I loved the guy. He was brilliant. He's my favorite person I've ever worked for to this day." But he said something that should have made me absolutely lose the plot, but I didn't. I just laughed. Because I liked him so much. But he said to me once, he goes, "Do you know why I love you, Ed?" And I went, "Why is that?" He went, "Because you're as smart as a grad, but I don't have to pay you as much." That's what he said in an actual one-to-one. And I was like, yeah, that's kind of true. And you kind of realize how ridiculous it is.
But I'm gonna start planning my own company today, own company time, and then I'm gonna take advantage of European labor laws to have you pay me for 3 months while I get my company. That is incredible.
But I quite liked his honesty. I quite liked his candor. He was sort of joking, and we had the relationship that he could say that to me. But it did make me laugh. But I think fundamentally,
go ahead.
It comes back to the education system's broken. And I'm going off on a high horse again. But we've got this education system, right, where we've gone out into the world, and we at this point have established that there are lots of different learning styles that people have, right?
Yeah.
And then we go, we're going to give people these bits of paper that give them a massive advantage over everyone else because they are familiar with and they thrive under one learning style, which is, can you sit and be talked at, remember it and regurgitate it, and that's it. And that's how and then we'll give you a degree at the end of it, and you're at an advantage. And all the other learning styles and all the other ways that people think, and we talk about kind of neurodivergence. Is that the right phrasing?
Is that
so people whose brains just work differently, and that doesn't mean and my brain works way differently to most normal people. You can see that from the content I produce, and it doesn't work like it works an odd way. I get agitated about things I shouldn't, and
it makes you an amazing marketer.
It just makes you different. That's it makes your rhythms different to everyone else. It makes you able to cut through the noise more. So this whole, you haven't got that, so you're no use to me, is such a naive approach in recruitment. It's like, I want as many different viewpoints, as many different skills, as many different worldviews.
And the research today, this wasn't the case 20 years ago, but the research today is very clear that the more diverse and the more neurodiverse your company is, especially your leadership, the better it performs. So so diversity, it's no longer let's work on our diversity inclusion because it's the right thing to do. It goes beyond that. Companies perform better the more diverse they are. So there's a business case to it. But this is just in the last 5 years, maybe, that we've got proof that this is important. By the way, I do see that you have your CII, which is in my mind the British equivalent of the CPCU in the States, or the is it CIP in Canada? So anyway, possibly. Once you got your CII, because
I only have my cert. I hasten to add, I only have the cert, which is the start one.
Okay. So
you would go cert CII, dip CII, and then the full ACII, which is the big boy qualification.
Here in the States, my advice to people who did manage to make it into a career without a degree is don't worry about the degree. Get your CPCU. That's going to help you grow a lot faster than getting the degree. Maybe one day when you're a manager and you're competing for a director level role, then maybe, yeah, finish your degree and maybe think about your MBA. But early on, a CPCU in hand will get you out of the call center quickly. Will get you out of claims quickly. Will help you grow within underwriting quickly, more so than finishing your degree. So in that sense,
it's that leg up, isn't it? It's that first little leg up to differentiate yourself from all the other. Yeah.
See, what I tell people is CPCU gets you the interview, and then you get you the job. And especially if they're, the you and me types that were not great students, but that are street smart and have great personalities. I like to say C students. I'm a proud C student. C students are much better negotiators because they have to. They have to survive, right? Like we didn't always have fantastic grades. We had to negotiate to graduate, basically. And we make fantastic professionals. But if you decide on whether to give me an interview based on my GPA or my I don't know what you call it in the UK, right? But like there are programs here, especially right out of college, where they won't interview you unless you have a 3.5 out of 4. So it's something like a 9 out of 10 or a 9.2 out of 10, or I don't know how you guys grade in the UK. Right. So you miss out on those programs early on. But once you do make it in, something like CPCU can help you get the interview, and then your personality can help you actually get the job. So I think that the U.S. Insurance carriers are less obsessed with education than what I'm hearing from you when it comes to the UK carriers or the European carriers.
Yeah, just some of them. Not all of them. Some were more interested in it than others, but I was just interested as to whether it was similar in the States, because I just don't.
There is one, and I won't mention them by name, but they're a regional or super regional carrier who they were the very last carrier where you were required to wear a tie to work, and we're talking like 2017, 2018. You were required to wear a tie to work. You were required to wear a coat, like a suit coat, and you could take it off if you were at your desk. But if you got up from your desk, you had to put it on. And I interviewed with them in like 2016, and they asked for my transcripts from college. I graduated college in 2006. So 10 years later, they were asking for my transcript. And not only that, they told me that they would use my transcripts and my GPA, my grades from college, as part of the formula that defines how much they're going to offer me. That's just insane, right? And they will not hire somebody without a degree, but they're an exception to the rule nowadays.
I mean, if your biggest concern as a business owner is walking into your office and seeing that everyone's got ties on, get a grip. Like, get your perspectives right. That it doesn't matter. It's unimportant. Don't kid yourself that walking out into the floor and seeing everyone in ties. Don't kid yourself that that's culture. That's not culture. That's just you enforcing stupid, pointless rules and making people less happy in their job day to day.
So around 2019, a little bit before COVID, they finally got rid of the rule for the ties, and they announced it in an email. So I wasn't there because I never worked for them, but I heard the story from multiple people where everybody's working, and then a mass email comes out, and then there is literally cheering in the halls, and people are running around with scissors cutting each other's ties. That is how much they hated the rule. So yeah, it is absolutely.
That's not something to sell. So that's, to me, that's the wrong way around. That's not something to celebrate as a business that we've made this great progressive change. It's, if you see that level of happiness that they've got rid of them. That tells you how much they hated it. How many people did you lose because of that? Yeah, how unhappy are they? How less productive are they? How many people did you lose to people who weren't as archaic? And it's just mental.
And today's version of that is not letting people be remote. It's just mental, right? You're losing a ton of great talent that doesn't even have to move in order to get another job, and the better job, and replacing them is going to cost you a lot more, because you're going to have to overpay in the market to convince somebody with the right skill set to be willing to relocate or even just to commute when they don't have to, when they have other options that are just as good, where they don't have to. You're going to have to overpay, in my opinion, by 20 or 25% probably, in order to get the right person, and that's going to kill your expense ratio.
So are you a supporter of fully remote or hybrid?
I'm not a remote absolutist. I don't think that it's the only option. What I am is let the employee choose. Measure me on productivity. And if I want to come in, let me come in if I live nearby. And if I'm not performing, fire me on lack of productivity. And if I want to come in, let me come in. And if I don't want to come in, don't make me come in. And if you're going to force me to come in rarely, and I call it present for a purpose. If I'm coming in, if you're forcing me to come in, you should be forcing me to come in because we are doing something that benefits from me being here, not just my day job, right? So training is better in person, in my especially if you're going to put me through like a day of training. It's right. There is some relationship building that is better in person. Jacobson, the company that I worked for 4.5 years, actually did it really well. After the pandemic, they let us all go remote and basically said, let's come in twice a year. We'll pay for everybody to come in twice a year, even if they don't live in town. And we will celebrate training and things that benefit from being in person. The rest of the time, do your day job from wherever you want. As long as you're performing, we don't care. I think that's something close to the right attitude.
It's I think some people, they like having people in the office. They like that sense of presenteeism, because they confuse people being there and people like it's the same people who confuse we had a meeting about it, so that's progress. And it's like, no, the progress is when someone writes up the meeting notes and does something with what you've discussed. Actually having the meeting was no progress. It unless something happens with it, you're still at the same point you were before that. And it's those same people who are like, oh yeah, well I mean, Andre Symes, I remember him saying this to me a while ago, and it was like, just this notion in lockdown of getting out of this. I got up at 6 o'clock this morning. I was on my first meeting at 7 a.m. and I had my last meeting at 8 o'clock at night, and they were just all back-to-back Zoom calls constantly with meetings. And it's like, they're not productive. There's no point. Have 3 meetings a day and just make them the best meetings you'll have all day. Be really punchy, be really quick, be really concise. I used to like Aston Lark had a great idea that when you used to go and visit them when they were Aston Scott, they're a broker in the UK, they wouldn't let you have comfy chairs. They'd make you sit on these stools in the trading room so that you didn't want to sit there and just chat for 20 minutes. You were like, this is really uncomfortable. This is what I need from you. This is what you need from me. Let's get this done and then let's move on. I thought that was a great idea because it just forced everyone not to do what I've done and rabbit on for an hour and 6 minutes, about everything.
We have gone a little long, so I agree. And any last deep thoughts before we close off today?
Oh, deep thoughts. Yes, here's my deep thought, and this is more of this kind of goes into some of the core talk stuff that we've done. Core Talk Series 2 is coming out shortly, and my goodness me, are you in for some treats with that? We've really, you say you think the production was good on the old stuff, it's even better on this this new series. We've really ramped it up. But take that as a motivation, right? When you're dealing with customers and when you're dealing with other people in the industry and when you're doing stuff online, and I think you're great at this, Tony, be interesting. For the love of God, be interesting. I can't watch any more webinars or people talking at the camera who are just droning on like this about the... People want entertaining. The point, that's how life is. And the thing that annoys me about it is that the same people who are creating that content, the same people who are talking on stage in that way, the same people who are writing blogs for them, they also want entertaining. They also watch entertaining stuff. They know what entertainment looks like, but they just don't put the effort in. They just deliver this bland, opinionless nonsense.
Think that insurance has to be serious, or they think that insurance has to be corporate, and it doesn't. I'm a big fan of technically strong, know your shit. Before I became active in the industry, the first thing I did is I got a bunch of education. But once you know your stuff, be interesting about it. I agree completely. There are episodes of the podcast that never air because I could not, during recording, I could not find the way. Usually a tech co-founder, I could not find the way to make it engaging.
And I'm a tech co-founder. Is that your subtle way of telling me that this is never going to air, Ed? You've taught nonsense for an hour and 6 minutes.
I will be telling you exactly which day it'll come out as soon as we're done recording. But there are episodes that never go live because the actuary on the other side, I just could not get him to engage. They were super dry.
I think the thing that people don't understand when I say that is they sometimes they throw it back at you and they go, well, not everyone's funny. Not everyone's got jokes to tell. Not everyone's. It's not about being funny. It's about being engaging.
Yes,
like
I agree.
Question Time in the UK is interesting. A political debate is interesting because it's got some passion to it and it's got some structure to it and it's got interesting points and counter arguments. But just talking flatly at the camera, or it's just dull. Everyone's got some interesting stories. For the love of God, share them. That's my closing thought. Be you, be authentic. Stop trying to be bland, because don't kid yourself. No one's watching, no one's listening. They listen for the first minute, and if you're boring, they're gone. I lost everyone 58 minutes ago. At best, if they're still here at this point, I'm sorry. It's going to be my mum. No one's listening. No one's got time to listen to me for over an hour. Come on now.
Ed, it's been fun as always. And you will always be close to my heart in the episode where we did our best to have a lightsaber fight via Zoom. Thank you for joining me today.
Thank you. Appreciate it. Good fun.